Right now, the US and UAE are teaming up to build the largest AI super hub on the planet, Stargate UAE. While government officials are busy debating China's role in the project, hedge funds are already making their move. They're quietly funneling billions into 7 AI stocks they believe could lead the next decade of tech dominance. Let's break them down, one by one. And trust me, the last stock on this list plays a role in powering nearly every AI chip out there. 1. Coreweave, CRWV. Starting with Coreweave, ticker CRWV. This company is trying to reinvent the cloud, but not for the average business. Their focus is all in on high-performance computing for AI developers, especially in machine learning and generative AI. Unlike Amazon or Microsoft, Coreweave doesn't offer general-purpose cloud services. They've carved out a niche, and it's in high demand. But there's a problem. Analysts at D.A. Davidson recently gave Coreweave a negative outlook, citing a risky financial structure. The company's relying heavily on debt and doesn't seem to have enough equity built into its contracts. Some analysts say it may need to raise over $10 billion in equity just to meet project obligations over the next couple of years. That said, if Coreweave can land that funding and build out its infrastructure, it could end up becoming a critical part of AI's global backbone. Upside, high demand and little direct competition. Downside, heavy debt, high risk, and no current returns for shareholders. Now here's a thought to consider: when a company's bleeding cash but leading in a booming tech space, is it a ticking time bomb, or a once-in-a-generation opportunity? 2. Supermicrocomputer, SMCI. Next up is Supermicrocomputer, ticker SMCI. This company is bringing AI processing out of giant data centers and into the real world. We're talking about AI in retail stores, hospitals, factories, even traffic systems. Just recently, they teamed up with Ericsson to merge AI servers with enterprise-grade 5G tech. The result? AI that works right where it's needed, without relying entirely on the cloud. Edge AI is a massive opportunity, and Supermicro is positioned right in the middle of it. Strengths: first to market with integrated solutions, solving real-world issues, and a solid reputation for quality. Weaknesses: still a hardware company, which means slim margins and exposure to global supply chain problems. If you believe AI is about to be everywhere, this is a grounded, real-world play. 3. Palantir Technologies, PLTR. Let's talk about Palantir, ticker PLTR. Most people know it for working with US military and intelligence. But Palantir is now pushing hard into the commercial space. Recently, they signed a multi-year deal with an Italian paper manufacturer to use Palantir's AI platform for supply chain optimization and demand forecasting, turning a traditional factory into a data-powered operation. What makes Palantir stand out is that it's actually showing results, not just hyping AI. Upside: long-term government contracts, recurring revenue, and a growing list of business clients. Downside: the stock trades at a high price compared to its earnings, and it still depends on a few big customers. It's a mix of proven government work and new commercial potential. 4. Qualcomm, QCOM. Most folks know Qualcomm as the company that makes smartphone chips. But behind the scenes, they're making a serious move into AI. Ticker symbol QCOM just spent over $2 billion to buy Alphawave IP, a company that builds the high-speed connections needed in next-gen data center chips. That means Qualcomm isn't just about mobile anymore, they're going after the AI infrastructure market. Strengths: world-class research, valuable patents, and growing AI exposure. Challenges: mobile chip sales are slowing down, and integrating a new company always comes with growing pains. Still, if it goes well, Qualcomm could become a major player in AI hardware, possibly challenging the likes of Nvidia. 5. Tesla, TSLA. Next on the list is Tesla, ticker TSLA. There's no sugarcoating it, Tesla's electric vehicle sales have slipped in the US, China, and Europe. Margins are tight, and price cuts have taken a toll. That's why some analysts have stayed bearish on the stock. But here's the flip side: Tesla's AI story is still very much alive. They're rolling out a robotaxi platform in Austin this year. If successful, it could mark Tesla's transition from just an EV company to a full-on AI-powered mobility platform. Bullish case: they've built one of the most advanced autonomous driving systems in the world, powered by their in-house Dojo supercomputer. Bearish case: The risk of failure is high, the EV market is cooling, and China's competition is heating up. If you believe Tesla is playing the long game in AI transportation, it's still a company with a lot of future upside. 6. Apple, AAPL. Let's shift to Apple, ticker Apple. At their latest developer event, people expected a big AI reveal, but not much happened. Siri upgrades were delayed, and no major AI features were rolled out. Still, Apple's laying the foundation for what's next. They're working on something called Liquid Glass, a new user interface that could make iPhones feel smarter and more personal by 2026. Pros: Apple's known for world-class design, tight software-hardware integration, and unmatched brand loyalty. Cons: slow to roll out AI features, and no immediate breakthroughs compared to competitors like Google or Microsoft. If you're a long-term investor looking for a steady company with future AI potential, Apple still fits the bill. 7. Taiwan Semiconductor Manufacturing Company, TSMC. Last but not least, TSMC, ticker TSM. This is the company that makes the chips used in nearly every AI product, from Nvidia's GPUs to Apple's processors. TSMC doesn't just benefit from the AI boom, it powers it. In May, they reported a 40% jump in revenue, driven largely by AI chip demand. They're building out new facilities in Taiwan and the US to keep up with orders from companies like Nvidia. Upside: unmatched scale, deep expertise, and critical to the entire semiconductor industry. Risk: tensions between China and Taiwan are a big concern. Any conflict could disrupt operations. But if you're looking to invest in the infrastructure behind AI, this might be the most foundational stock out there. Quick recap. Coreweave, high risk, high reward. No profits yet. Supermicro, real-world edge AI, but tight margins. Palantir, huge margins, still maturing financially. Qualcomm and TSMC, profitable, stable, with serious AI upside. Tesla and Apple, heavyweights with very different approaches to AI, one fast and bold, the other steady and calculated. Final thought. Are AI stocks the future of investing, or are we all caught up in the hype? Wherever you stand, these 7 companies are playing major roles in shaping what's coming next. Let the numbers guide you, but keep an eye on the big picture.